Ladies and gentlemen of the crypto space, we're live on a Friday, June 21st at 11:39 a.m. Lots of technical data, lots of interesting things going on. Always another exciting day. We got to keep our ear to the pavement, our eye on the ball. Pick your favorite phrase. We have to understand what's going on in the system. Otherwise, we're not calm, cool, and collected. Title of the stream is It's Over. Yeah, no, I'm not talking about it's over in necessarily a negative connotation. It's over. Things start, things end. Things are over. What's over? Investment season is over. It's over. Now, obviously, I'm speaking for myself. It's my stream. I speak for myself. I define this as over. Now, obviously, this is a great manifestation of hindsight and expertise, and for me, it's over. I have the investments that I'd like. I have the exposure that I'd like, and it means there's nothing else to do. You need to find yourselves at some point in a place where you've acquired what you want to acquire and you've exhausted possibilities. What else is there to buy? There's only X amount of things that warrant purchase. After strict, prudent judgment and due diligence and all the fancy fiduciary terminologies, you spend your time and effort in this space to identify what you want exposure to. And the most important thing you absolutely need to identify is if you are acquiring exposure to something and you're like, maybe I should flip to something else, or flip. You're going to drive yourself absolutely mad. No, I say that with actual personal expertise. And I have been triumphant at alleviating that horrible burden of insecurity, lack of confidence, lack of conviction, and I've codified that in literally document form at this point, and I acquire something. It's a purchase, not a position. Purchases are paid in full, optimally, and that's it. You own something. Next, you buy something with debt, as we've discussed. You pay it off. Next, and you're acquiring ownership. What else is there to frickin' buy? That's just my explanation, in good part, for my sentiment, my opinion, my definition of where we are in the cycle of things. And it's been 2 years. So obviously there's a lot of persons that listen to me. It's a small community, a couple hundred in the best of the days. And some folks are new. Lots of folks are experienced. But I must speak from an experienced perspective of what the hell you've been doing the last 2 years. So obviously, if you're a new person listening, there's a lot of different considerations. But over the last 2 years, we have been discussing and talking and contemplating and analyzing and assessing potential viable positions to have exposure to. And we've acquired them. I don't mean it in a bad way, but it's important to state, what the hell have you been doing the last 2 years? That shit was bloody in 2022, and there was the discounts, and there's still discounts, but for me, we've already acquired this stuff. We own what we need to own. It's over. It's all over. The investment party is over. Okay, I got the move up. It's just beginning. From it's all over to it's just beginning. It hasn't even started yet. In 2 seconds flat. Look at the capital appreciation cycle, the currency expansion cycle. It hasn't even started. Literally, it's a mean regression. Let's zoom TF out. It's literally everything we've seen thus far from 2022 to today is literally, technically, a mean regression. You were just interacting with the time weighted average price for the first time in 2 years after a significant deviation and aberration from the norm, the average. I mean, it's literally the average for like the last, since, let's say, October 2009. It was a nice downtrend until 2020. Look at that. The chart just tells an entire story. Look at that. You could put a trend line right there. It's 10 years. 10 years of a very clear downtrend in the volatility of money. And then boom, aberration to the upside. So, we're just figuring out what the new norm is, the new system. The system is certainly new. And people are going to be like, oh, well, what kind of system we got now? What's this captain guy talking about? New system. The whole system's fucking changing. And we get to figure out what the hell it's changing into. That's what occurred in 2020, basically the introduction of a new system. And why? Because that shit broke. Hello? McFly, hello? That shit broke, bro. This little wick right here ain't so little. Pop! It's broken. This is probably akin. It broke to such a degree to the way like Raul talks about it in like '08. Yeah, that was a reset. And right now, coming out of 2020, the post particularly the end of Q4 2022 as well. So this was like, yeah, whatever we did in 2020 didn't work because it blew up again in 2022. So now we're trying to figure out, okay, they did restructuring and they have to adjust the infrastructure to accommodate or create a new norm for broadly economic activity at the global level. There's some global shit, boys and girls. There's some big league shit you're looking at right here. This is the money system. That's hard to really encapsulate in the phrase big league shit. This is literally looking at information that is expressive of something that affects each and every one of us down to the atomic level, something like that. It's really deep. Some deep monetary philosophical shit in this chart. Anywho, we can look at technicals all day long. Basically, Japan is absolutely blowing up. That's crazy. We'll see what they do. The economics is all about causality. This is occurring. This is real. This means a lot. This means as this goes up, they're going to raise rates in the U.S. This is causing tightness. It's raising the interest rate on debt. The fair market value, or the market's pricing of interest rate on collateral. They're tightening the system, and they're going to blow shit up. They're decreasing the market price of debt or collateral instruments. This chart is crushing the global of a health factor. Oh, maybe that's some context that makes sense for you. That's what this chart expresses. Of a health factor go down. Engage. Arrow's in the house. Good morning. Speaking of it's over, can you please take a look at Arrow and Velo? I don't want to. Don't make me look at that stuff. It's I don't want to look at RAM. Go complete frickin' retrace. That was a 10x. All right, is what it is. Still produces very nicely. What am I complaining about? Let's go through the ones I care about. Clio, you're dead to me. Mantle, dead. You produce $100 a week, I'll be surprised. But it is what it is. I do think last week was $100, but there's literally nothing to even vote on. You can't even vote on Cleo Mantle. There's literally no activity. It's just anyway. Let's see what Niles at for the week. Then we'll look at the technical data. I'll get back to your Arrow and Velo. All right, 111. It's on a Friday, so that's 2 days. And Ramsey's 172, so it's 270. All right, fine. Listen, if this gets to what it was last week, 800 to 1,000, it's 52, and that's even including the Clio position. So between Ramsey's, Nile, and Clio, that was a 65K deploy. So if it's pulling in 50, that's pretty remarkable. So look at me. You gotta put this stuff into perspective, ladies and gentlemen. If I deployed 65 and I'm making 50 a year, that's insane. That is mathematically impossible in real estate. That's just not going to happen in equities land. So as much as we're unknowing what the hell, the PA, the technicals are going to be for the asset. That's a cash flow number that's unheard of anywhere. What's that, like 75, 80%? And that's literally considering a failed acquisition because of Clio's just underperformance. So two protocols, it's 75% is insane. You're talking about real estate at like 8 to 12% with all the fancy shit they do in real estate, and you have to come up with 12% a year. If you're not making 12% a year, you've made the wrong investment. That's the hurdle rate for global capital expansion. So 75 will do it. Let's see if they do the death spiral, like the curve death spiral that everyone is so fond of talking about because nobody understands it like we do. Technically, bleed out. The revenue is from capital went in, it's bleeding out, and we'll see what plays out. Bleeding out, basically a full retrace almost at this point. With the rebases, I'm still sitting on like 100% return on basis. So I don't know. I'm curious. The whole point of an investment is exposure to see what happens. And let's do your Velo and Arrow, and then I'll give you a good story. I was talking to Ben last night. Ben from Tapioca. Tapioca is going live today. Velo looks interesting. Didn't we acquire, discount the VE NFTs aftermarket around this price? All right. Okay. I'll take that. Arrow? Yeah, Arrow USDC. Okay. Oh. Oh, God. I remember some dude saying he was going all in at $1.80. I can't. The pain. Same thing as what's occurring with the kingdom. Strong narrative with base. It's not about price appreciation. Okay, so what's playing out with V33 is the same as what's playing out with VE, just with some different overarching expectations. Nobody can duplicate Curve because Curve requires the Federation, which is third parties to drive capital flows and to finance disruption of circulating supply. The vote rentals are basically what V33 does with the pure bifurcation of incentives. The vote rentals in V33 come from transaction fee revenue. It's iterative. So this doesn't mean it's going to perform differently with regard to price action. V33 solved nothing with regard to the volatility that's expected as a result of dilution. And clearly the only thing that cures the dilution is the disinflation. And the disinflation takes years. You will not know what the hell is going to play out with V33s across the board until 2028. you need to get through 2026 first. And that's where we are with Curve Ecosystem. Curve Ecosystem, we got through 22, we're in 24, and literally Mitch just got liquidated. So it's like battle tested at this point to say that it has a capacity to survive. And with the Federation, that just everyone's existentially tied to it. Everyone's incentivized to survive. They want to live. So they will do what they have to do in order to facilitate the continued existence of all the federated components. It's all required for its survival. We'll see what happens with regard to V33s in that regard, because there is third-party vote rentals, but he doesn't have third-party protocols that are existentially dependent on it. So that is still remains something unique about Curve Federation as compared to the completely encapsulated reimagination voter escrow in the 3-3 format. So in hindsight, these are very interesting things to have exposure to. I'm very content with these investments. Obviously, everything's paid off as I've discussed. Then comes boom last week, Tapioca. It had, my opinion, probably changes the entire equation for a lot of the crypto space. If what is designed in Tapioca plays out, this affects the likes of Aave. It's not in the sense of disruption. That's another part of the conversation, but in the sense of iteration and innovation. The next, something new, something that is certainly better economically with regard to incentives and the capacity for incentives to drive protocol alignment. It's pretty weird what's playing out with Tapioca. Like people that are really aligned with the protocol to acquire revenue from it, that's the only people that are buying. And that's why the chart looks the way it does. This chart is literally an expression of whoever bought is aligned with the protocol. They're not selling. This is the antithesis of anything you see, go up, go down. Thus far, still relatively new, and we still haven't launched yet. But, I have a hunch that this is iterative along the lines of how iterative Andre was on top of VE with his V33. This is Tapioca's indeed an iteration of an incentive system on top of V33. It is something new, and that's meaningful. I'm quite excited for this, and I'm very content to have the exposure that I do. I look forward to the cash flow, which is literally coming soon. If they launch today, 27 between now and the 27th, you get your stuff locked, and we'll see what kind of cash flow comes in. We cannot assess what the XYZ equation produces until we actually start to experience it. Anyway, that being said, that's cool. Investment season's over. There's nothing to do. We have the exposure we want. Now it's just time. Sit back and let your businesses work. Acquire your collateral. Accumulate your collateral. You can take your debt, and you do the cycle that we have been discussing for the last 2 to 4 weeks at this point. Oh my, Arrow. You know what we've been talking about. Woo! There is no up. Directionality continues until capitulation. And capitulation isn't about price level, as we see with all the other V33 implementations that are dependent on dilution. Everyone is destined to do what Clio does unless there is effective incentives to drive locking. Nile has a fair amount of support because, there's a fair amount of network activity. Much more network activity as compared to Mantle. Much more network activity on Linnea as compared to Scroll. But Scroll and Linnea are very interesting narratives. So that's interesting exposure for the folks that did farm pedals on Nuri. I think that is a very interesting exposure. I'm very content and hopeful, and I look forward to seeing what the hell they do with regard to RAM exposure, offering exposure to Nuri. So that's the best way to think. And I have a couple of hindsight conclusions regarding what I've purchased of late. Clio was a mistake. With regard to Nile, I wish I had exposure to RAM at a more opportunistic time because Nile was dropped on RAM holders. So in hindsight, I should have owned RAM and Velodrome at more opportunistic times. Arrow was a freebie for Velo, and Velo is now expanding everywhere across the superchain ecosystem, and every derivative of the kingdom is for folks that had RAM at an opportune time. So I didn't. I didn't have them at an opportune time, so I probably wasted a little bit of capital acquiring the exposure I currently have. In hindsight, I'm not disappointed, and the most important thing, all debts are paid, books are clean, and now we proceed with standard operating procedures. Calm, cool, collected. Come on, Japan. Let's see what you got. Hope that helps. Rupert, what's up? DCA, man. Good morning. Raul, hello. Are they going to devalue the dollar? Of course. If they don't, the game stops. Appreciate the consistency in the last 2 years. Rupert, much a pleasure. Is there going to be disparity between asset holders and non-asset? Dude, every disparity you know that exists today, the 99 top 1% own everything. It only gets worse. It gets worse to the degree. What's the history of France? Proletariat uprising. All of this leads to social unrest, where the laborers, the people that own nothing, they don't even own their home or their car, get alone investments and assets, they end up in violent protest. And what do you do to quell violent protest? Socialism. You try and distribute the capital from the people that own everything via taxation and debasement. It all ends in the same way. Over and over again, rinse, repeat. These financial systems are doomed to do exactly what they've done over the last hundreds and thousands of years. So, what are you going to do about it? Jump on board and own the assets. There's nothing else. There's nothing you can do. There's no options. Well, you can. You could be a hippie and choose to not play the game. Yo, man, life is good, man. Yeah, that's cool. Opt out of the system. If you're going to play this game, there's no winning this game being a laborer. Even a professional. Entrepreneurship always works, and that's meaningful, but that is not. It is much easier to be an owner, an asset owner, than an entrepreneur. There's no certainty in either. I think the odds skew towards asset ownership over entrepreneurship. Anyone could be an asset owner, albeit obviously there's quite a process of being an astute fiduciary with regard to asset ownership and capital management. So there's challenges in both. So all of this expresses complexity, that it's not easy. And therefore, that literally just alienates the majority because the majority are not capable of executing complex capital management or, frankly, just capital management. And that's why currencies are created. Currencies are created to organize and cater to the majority who cannot outperform, and cannot excel at complex tasks. The vast majority of the population are blue-collar laborers, factory workers and tradespersons. Albeit tradespersons is a hell of a skill, but it's hard work, hard labor. It's not the. I can't diminish it. I love skilled tradespersons that can fucking bang out sheetrock and do all these. That's crazy skill, but it's still limited from a labor perspective on the amount of income possible because it's still trading time for receipts. But a skilled laborer can really get into entrepreneurship and start having contractors. And you have less skilled laborers, more of them, executing more sophisticated jobs based on your expertise. So what I would say in that regard is that that's becoming entrepreneur rather than a skilled laborer. So it's just you could really digest the structure of the system, and you don't really get blocked. You could really understand all of this granularly, but that's not easy. Like this entire conversation is some complex shit. Most people can't. I don't even understand what the hell I'm saying half the time. So Snoke, yes, there's going to be a great deal of disparity, and it only gets worse to the point where you get social unrest. Need we not look at the farmers in France dumping shit everywhere? Those boys know how to protest. Oh, that's good stuff. Tapsy, hello, my friend. Nobody in my real life understands my chart exception. Enjoyers. Yeah. To be careful with chart obsession. So what does a chart mean? It tells you information, allows you to assess where you are. It's like looking at a map. A map does what? It tells you where you are. That's what I just said. But both of them do the same thing. The price charts as well as actual maps. They bring you comfort, relieve anxiety. They should. You guys need to get over that whole trading bullshit. That shit will drive you nuts. The whole point of data is to let you know where you are. And then that brings me comfort. Look, I see this chart of arrow, and I'm like, oh, that's cool. Because I have a much more grandiose, holistic framework and business rules that I operate with that bring me a great deal of comfort. Look at all the volatility. People are probably talking about Bitcoin at 63. All right, great. Bitcoin's cool. It's great collateral, meaning I got Bitcoin sitting here. It's down. It's appreciating in price. I'm not freaking out. I'm not even thinking about doing anything. I just want more of it so that I could borrow more and operate this business. This is a component of the business. This business is the goal. This is my end result. It's not a higher balance. Look, it just dropped. All right, great. I need more collateral. So I measure my success in achieving my expectations. We've talked a lot about expectations by, do I have more? I've kind of been stuck on one. I've been acquiring more of these little ETH fellas. That's irrelevant. It's something I think about a little bit, like what's the balance of collateral, but that's my goal unto itself. I'm not really thinking about the price, and interestingly enough, if the price goes down, I could acquire more of it. More collateral, more investments. Snoke is mentioned earlier that does it lead to disparity? Yeah, I'm going to buy more of this stuff, these assets. More collateral, more investments. Investments produce cash. Cash buys collateral. Collateral takes debt. Investments pay debt. Debt finances investments and real life purchases. Pay off the debt. Investments buy more investments. I don't know. That's it. And now, instead of your expectation being some magical, mythical net worth shit, your expectation is how well you execute your process, your rules, your business. And that's it. Adhere to your business. That is your expectation rather than number go up. That shit will drive you nuts. It's not sustainable. DA advisor, good morning, Sir Joe present. Holly Folly loving the observation on the US dollar versus yen. Yeah, it's where's it all heading? It's pretty obvious. It's what Raul says. It's all going to land not on the Fed balance sheet. They're going to policy commercial banks into buying it all. And whatever they do, they're going to do something because otherwise, uh, Immortan Joe is the person we're going to have a conversation with. And what do you do in that situation? Adam, hey Cap, where does the 12% capital expansion come from? Inflation rate plus debasement. Raul talks about this topic. So if you want to own a part of the system, and the system is expanding at 12% per year, you got to account for that. If you literally grow your capital 12% per year, you own the same relative proportion of the shit in the system. Also, by investment season is over, do you just mean for yourself personally with curve all-time low and a few? Yeah, but so the whole sentiment is, from my perspective, over the last 2 years we've been buying. If someone is brand new, as I kind of started talking about at the beginning of the stream, they're just trying to figure things out, and clearly investment season isn't necessarily over. Optimally, investment season is over. But for someone new, it can't be over. So they're just trying to figure things out. But the thing is, a person that's new is not thinking in terms of investments. They're thinking in terms of, I want to buy something and see the number go up. And that's not a sustainable methodology. It's going to drive yourself nuts. You're not going to be calm, cool, and collected like we're talking about right, or how we're talking right now. Clearly, this is not necessarily applicable to you. You've been around the block, Adam. You've been here for quite some time. You need to be thinking in terms of, how do I find comfort to let things do what they're going to do? That's kind of the story I've been trying to tell, especially of late, but certainly for a fair amount of time so far, over the last months, if not a year or so at this point, is how do you find the comfort zone? Look at Bitcoin doing what it's doing. It's at 63K. Yeah, all right. So I get a paycheck next Wednesday, Thursday, Friday, and what do you do with it? Pay your bills and pay off your debt, and excess capital goes to collateral, and then rinse and repeat. And I don't have any more investments. I bought it all already. What else is there to own? What else is there to own? We have it all. Or we have it all in the sense of what is a qualified investment based on our investment methodology. So as a prudent fiduciary, you could only invest in things that are actually good or aligned with your methodology. You need to define what your portfolio is to be. What is the structure? What are you creating? Write it down if you have to. This is the story we've been telling for these years. TW Matt and Ben start to feel like the new Andre with what they built with Tapioca. Certainly, as I talked earlier in the stream, I see Tapioca is certainly an iteration on tokenomics, monetary policy, incentive systems. It's going to shake things up if it does what I think it's going to do. Athletic Concept. Hi, Cap, at work, checking in. Incoming. Yeah, it's Friday. We got no income on Friday unless it's from Meat Space and you get a paycheck and stuff like that. So, next Wednesday, next Thursday, and it's just the name of the game. How can you always buy close to the dip? What's the dip? Here, check this out. What's the dip? Is there a dip in Bitcoin? Everyone's like, oh, Bitcoin's at 63. What dip? I don't see no dip. You want a dip, you're going down to 16. Dip is relative to time horizon, and you're going to drive yourself nuts. There's no dip in this chart. There was a dip in this chart in 2022. That was a dip. And that brought us back to, more or less all-time highs in 18. So look at that cyclicality. 18, 22, 26. Oh. Looks like that 4-year cyclicality is about right. It turns out that Bitcoin halving's 4 years, but the 4 years is meaningful, but that timing of it doesn't necessarily coincide with these dips. So that's really the currency expansion cycle and understanding what the hell's going on in Japan, what the hell China's doing. I mean, they're literally just monetizing everything at this point, trying to cure their deflationary collapse. And as they figure out what the hell's going on, the U.S. is finally getting under control money volatility. Collateral is money. Bonds are money. Money prints currency in favorable conditions. And what are those favorable conditions? Low volatility. And we've explained this in terms of an Aave market. You're going to borrow less against your Bitcoin and Ethereum in high volatility conditions because you're like, all right, what if it goes down? It's probably going to be at a 2 instead of a 1.3 on a health factor because it's volatile. If it's not volatile for 6 months, you're like, all right, I'm cool with a 1.3. If you're going from 50 to 60 to 50 to 60, you're probably going to want like a 2.5 or a 3 or 4, or for me, a 5. So you cover all bases, and you have pretty much no risk of liquidation between 5 and 10. I mean, 10, it's like, I like the 10. That's the most comforting. You do a health factor of 10, it's like, whatever. You know, I'm good. Just need cash flow, you pay off your debt, you're not getting liquidated. So, always buy close to the dip. What time frame? Is there a dip? I don't see no dip on this chart. Perspective. Anonymity. That is an awesome name. Airdrops were quite fun for people, but since 70% of redeemers immediately sell tokens, are airdrops an inefficient way to bootstrap liquidity? Of course. Airdrops are useless. Sell airdrops. They will go down because other people are going to sell them. Of course, it's a non-starter. What were the popular airdrops? Damn, Atom at 685. It was all Cosmos type stuff. Anything interesting? Let's get log. Let's get monthly. Oh, that's unfortunate. Frax-esque with regard to the hanging. Look at that hanging, except Frax blew through it. Very Frax-esque on the, or vice versa as well. Osmo blew out to the upside. Let's go to the weekly. But look at where it is. That's very interesting support zone. We'll see. What are the popular ones? Where is it? Tia Dimension. Very similar. Big retrace. 75%. Interesting exposure. Dimension as well. All right, great. I mean, when you get an airdrop, you're going to get just ridiculous depreciation. Just look at down to $3. I mean, who limited out? Twapped out at 5. I know someone who twapped out at 5. I ended up being able to twap out about a little around 4. Down to 3. Anything that's airdrop, just dump it. It's just not. The only one that's doing it right is, or new in a way that kind of changes the equation, is Tapioca. I mean, this is literally up from LBP. And you're at 5.5 mil in liquidity. These options, the way they built it, changed the equation. Now, other folks have done options. You got Bunny with options. Obviously, it all started with Fixed Forex. You got that team that's doing the V33 forks with options emissions. It's not holding up so well. So they're obviously missing something, but these are the boys that had that, I'm going to do something new. And so far in this chart, they did something new. This is a pretty, I mean, obviously it's a lower high, so this is a rolling top, and we'll see, but who's to sell? I mean, whoever bought literally paid to buy. All that shit that everyone was bitching about with regard to layer 0. Everyone's like, oh, I got to pay to buy it? And literally, there's no bitching here. It's, I'm going to buy my options. I'm going to exercise my options. This was just, That just was like, all right, it's an option. I'm gonna exercise my American option. So everyone paid to buy. So that creates a very interesting price action that you're looking at right here. Fascinating. I'm just tantalized by this thing going live, and between now and the 27th, and just gonna lock all my stuff and it's cash flow. Anywho, crypto tube cap's been hitting them side raises. Oh, my man. No, not really, but thank you. Is there a way to place automated buys at the 4 hour twap? Yeah, one inch. Oh my God, what are the other? Cow swap. Cow swap has limit orders nowadays. Just cow swap that bad boy. Limits goes through Gnosis for limits, which is very cool. Everything this protocol does. This is, as much as like Llama Swap offers the aggregator of aggregators, I don't even care. I mean, I wouldn't, not, no discredit to what Llama does. That product's great, remarkable. I go to cow. This is this is how you manage uh, your swaps, which is basically FX in financial terms. This is how you've managed the books. This thing is crazy. And I get a kick out of it telling the wife, like, go to cow swap. And she's like, cow? I'm like, yeah, the tech this is how you do it. It's crazy. Um, Tapioca paying out options and seems like it could mean less token downside. Should cap gains chasers ignore it anyway? I don't know. I, I don't know. With big protocol and liquidity, you see, the thing is, if it just does what I think it's going to do, just I can't think about it from any perspective other than I'm excited from an investor perspective. I think this thing is just going to print cash. I think it's going to be this omni-chain stablecoin, which doesn't exist. Right now, you're going through bridges left and right, and you have CCIP and for USDC, and obviously Layer Zero does what it does, but that's the whole point of what USDO is supposed to be. It's supposed to be this next level omni-chain stablecoin. And I'm inclined to think, based on what I'm seeing from their tokenomics, their launch, LBP, I think they nailed it. And that's crazy because I started talking about at the end of 2021 the concept of seamless cross-chain liquidity as being like the holy grail of, in my opinion, an investment. Because this is all about dollars. It always was, and it will be. It's all about dollars. And this could possibly be the craziest dollar in that regard. There's plenty of reasons that other dollars are great. I'm a big Curve fan, one of my largest exposure. Great product. This is a different product. And I've chosen to invest in this is the overall composition of the portfolio. And it all produces cash flow. These are all investments. Hope that helps. Professor J, hey Cap, hey Cap. All right, and what APR and TW tap are you going to be satisfied with? Uh, generally, I am required to invest at greater than risk-free rate of return per business rules. 10, 15, 20%. I think that's crazy. I've, because you got to understand in crypto, uh, APRs are inversely proportional to price point, your basis. So spot, as it goes up, the APR goes down. But APRs are proportional to business activity because unlike in equities land, there's no white pasty boardroom of executives voting on how much leftover pennies to give out in the dividends rate. In the power of the investments we've chosen in these crypto markets is the revenue of the business is our revenue. We own the business. And that means APR is proportional to, activity, financial activity through the business we own. So what does that mean? That means business activity goes 10x on the money. APR goes from 20% to 200%. What does that mean? People purchase the token and dilute that down from 200% to 20%. That means your token price goes up 10x on the money. Only in crypto can you have, a $20,000 position at 20% become a $200,000 position at 20%. That's the difference. That's crazy. That $200,000 position becomes a $2 million position at 20%, producing 400 grand a year. That's structurally, conceptually impossible to occur for an investment in NASDAQ or New York Stock Exchange. But that's the potentiality for these types of protocols over the next four, 8, I'm not going to put up my foot, 12 years. Those are the time frames to have in mind. Coming out of college, they said, what's your 5-year plan? What's your 10-year plan? Well, now we're thinking in terms of what's your 4-year plan? What's your 8-year plan? And for the long term, folks, what's your 12-year plan? And these are those plans. Nothing good happens in short order, or nothing good happens with high confidence in short order. But you're able to significantly increase your odds of success in 4, 8, and 12-year increments. Hope that helps. I think we'll wrap it up. We'll be short and sweet to the point today. Friday, June 21st at 12:26 p.m. I thank you each and every one for joining me today. 299 people made it to the end of the stream. You guys and gals are super duper awesome sauce. I appreciate you on a Friday. Discord's still there, private Discord. We got the best community, the most rational community in the entire crypto space. Lots of veterans that survive the bear market. And we all give great advice up in there how to do things a little bit different, a little bit more rational. Enjoy your weekend, ladies and gentlemen, and I will see you next week.